All right. Hey, everyone. Mark here, Mark P Markets. Thanks for joining me for another US market open price action analysis session and Bitcoin day trade setups. Okay. So let's get this started right away. Let's get this over with. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay. Hold on a second. All right, cool. So let's say hello to everyone. All right, we got Steen. All right, no problem, Steen. Good to see you. Thanks for letting me know. Travel, good to see you, Han. All right, Elijah's X. Okay, Bill. Of course, we got Alex. My only Romanian left. All the other Romanians left. My only one. Okay, you're gonna have to get some more Romanians in here. Anyway, all right. So if you're new to the stream, here's how it works. In this session, I basically just go over the major markets and I look for a day trade setup on Bitcoin. Okay. Now I'm going to see if I can get some of that day trade information into the channel. We'll talk about that in a minute. But so that's basically what I'm going to do. I'm going to try to keep this, within 30 minutes if I can. And here's how we're going to start this out. We're going to start first with our day trade information so that if a trade signal develops while I'm talking, we can monitor it. All right. Now, I'm not actually taking a real trade here. It's only going to be, for educational purposes or basically paper trade. Okay. So keep in mind, these things can lose. I call losing trades all the time. So paper. Okay. Don't put real money at risk. Use this as a learning opportunity. Okay. Also, real quick, I am sponsored by 8Cap Partners. If you are a non-US resident, meaning you don't live in the US, you're eligible to open an account with them. They're a Forex and CFD broker that is located and regulated in Australia. And they have a nice variety of instruments that you can trade. Plus, they're integrated with TradingView, so you can actually trade through their platform, through the TradingView platform. You could trade your account, which I think is a much better choice than the MetaTrader platform, which is what most Forex brokers offer. Anyway, so also, if you open an account and you deposit $500 and you trade a standard lot, you're eligible to take my training program for free. If you go that route, please let me know so that I can set you up properly with that situation. Okay. Also, if you're not in my Discord community, please join it. There's a link in the description portion of this video. Just click on show more. It's no longer free. Okay. I locked all the premium rooms yesterday. So now if you join, there's a 7-day free trial. I mean, there's a free area, but you're not going to get a whole lot of stuff. We're not going to share signals in there. But if you're interested in that, I also have a nice bundle with my training program. You can sign up for a 7-day free trial. Okay. And you can see what's going on there. So make sure you check that out as well. All right. Yeah, and you guys, all the people that were smart enough to send me their messages got a nice coupon. That coupon is no longer going to be available. Okay, so I am going to do a Cyber Monday sale, but it's not going to be as cheap as that coupon was. Okay, that was for all my early bird people. All right, anyway, enough talk. Let's start talking about price action here, shall we? And if you guys have any questions about anything, please let me know. You always know where to find me. All right, now, so let's do the Bitcoin analysis first. In fact, you can use any Bitcoin chart, but I happen to have Bitstamp up here again. We're going to go to BTC. We're going to go to a perp chart because some people may find that confusing. If you're trading, if you're involved in a futures contract, which is basically what you should be involved with if you're putting on day trades, then you should be looking at the chart that's relevant to your exchange. Okay, I mean just for just to keep things simple. So we're going to have the Binance chart up here. No particular reason. It's just the first one on the list. So now that's the 30-minute Binance chart. All right. Now, the first thing I'm going to do, I'm going to take the other one off here. We're just going to look at the 30-minute chart, and we're going to get our context and our levels for our potential day trade. Keep in mind, with day trades, there are no opinions. Okay. Things change very quickly. So we're only after momentum. That's it. So 1 minute it can be strong, next minute it could be weak. All right. And all we're looking for is a small bite in that process. If you notice here, I'm putting on, these are the day trade levels. Okay. These are your levels that you're looking at intraday. It's based on the 30-minute chart. Doesn't mean these levels are going to hold. It just gives us a point of reference. We're trying to collect some bits of information here that are going to help us make actionable decisions. Okay. Now, my goal as a trader is to make an actionable or rational decision on the least amount of information possible. Okay. Let me say that again, real big. Let me see if I can do this. Hold on. I want to do that. There we go. On the least amount of information possible. All right. I'm trying to be cool here with the special effects. Anyway, so forget poring over the news. Forget all that nonsense. Forget oscillators. Someone asked me yesterday, oh, how come you don't use any? Because they're not helpful. They provide zero advantage. You could flip a coin and get the same result. I'm not interested in flipping a coin. I want to see if I can get something a little bit more in my favor if possible. But going into this, I'm assuming that I'm at a 50% win rate. That is what I'm going into this with, 50%, which means I'm going to be wrong half the time. Okay, so you can still make money that way, but we have to try to isolate opportunities. And the only way we can do that, since I don't have any specific advantage, see, like others will lie to you and say, oh, I have a special advantage. No, they don't. They wouldn't share it. I don't have a specific advantage. So what I'm looking to take advantage of is a temporary inefficiency, and that inefficiency is based on human behavior. Basically, traders that get stuck on the wrong side, I'm looking to capitalize on their reaction. That's it, and it's very temporary. So is that a real inefficiency? I mean, I don't know if you can even call it that, but that's what I'm looking for. So that's what the trade setup is all about. Anyway, so let's talk about, we have some levels on the chart here. Now, I'm also looking at structure, right? Intraday structure. This structure right here. Again, this is a 30-minute chart. I'm not taking trades off this chart. I'm just trying to get some context. This structure right here is bullish, okay? Higher lows and higher highs. This structure right here, we can also argue is bullish, but between the two pieces of information, it's consolidating. It's a range, okay? So just with that being said, we do have this shorter term structure, if you want to call it that, in play, and that's on the bullish side, right? Higher lows and higher highs. We have a support coming up right here at 16,695. Okay. By the way, I mentioned a short idea on the swing trade time frame at 16,300, and I mean, look, this is what happens. I warned people about that. Okay. The trade becomes active, but you're in a high risk location for short squeezes, and that trade you should probably be out of. We'll look at that in a second, but let's stick to the day trade time frame here. Anyway, so we're looking at a possible support level at around that. I said like around, again, let me just confirm that. That was around, all right, we'll just round that. Okay, we're going to round that to 16,720 or 16,750, something like that. That's our intraday support. And we have some resistances. We have a minor one right here, which it's coming off of. That is 16,864, so it's about 100 points higher. And then we have this level up here, 17,100 area. Okay, so those are our levels. Now let's go to the 5-minute chart. Now on the 5-minute chart, again, we have the levels on the chart, and this is where we look for setups. Now at the moment, there's nothing here. All right, we have this bullish structure may still be in play, possibly. It's trying to find support. Look at the pin bars. There's a couple of them. But as you can see, it's not sticking. Okay, you see that? If this market was strong, like when you get a pin bar reversal and there's going to be bullish momentum, you should not see this. Okay, you should not see a lower high develop. That, again, that's an example of traders taking the wrong side. Now they're stuck, and then you get this while they all bang it out. Okay, and now we're testing support. So here's the thing. I'm open to, again, as a day trader, you're going to be pretty much aggressive right off the start, even if you're doing anything on smaller time frames. Price action on here is highly random. So you have to be open to both sides, unless it's like a clean cut, like obvious trend. Like, for example, on CPI day the other day, it was a clear cut trend the whole day. So there was really you had no business shorting things like the NASDAQ on that day. But here's the thing. So we're sitting at a support. If I get a buy signal here, I'm open to the idea. Okay, but there's nothing there. I'm not going to chase it. I'm not going to short this. Okay, not right now, because you don't want to sell into these supports not, when it looks obvious that way, oh, it's a short. Look at it. It's going lower. Don't be Captain Obvious. Okay. It's a support, which means it's a lower probability if you sell into that. It doesn't matter what it looks like at the moment. You have to understand, I'm thinking over here. Okay. I'm not thinking on the current candle. I'm thinking ahead of the candle. I'm thinking what's in front of me here. Okay. I'm not running back, on the offense, and I'm looking and I can see the defense in front of me. All right. It's not an open field. So keep that in mind. Now, so that's one possibility. Okay. The other possibility would be this support here, which actually would be the range low. That would be a much better probability, in my opinion, and offer better reward risk. So that's the more conservative level if it can get there. So we'll see. All right. Now, as far as shorts go, again, I'm talking longs right now. All right, potential longs, because we're sitting at supports. When markets push supports or test supports, I'm thinking long. It doesn't mean I'm taking longs. I'm thinking long. All right. I usually try to think. I'm typically a contrarian. Okay. This would be our first resistance area up in here. So that would be the more conservative place for shorts if I'm going to go short. So, but it's nowhere near there. It may get there in the next 20 minutes. Who knows? All right. You have to have an open mind. If it gets there, that's a potential opportunity. If it doesn't get there, then I'm not really going to be too enthusiastic about shorts into the lows. This looks nice now, but again, this thing can turn in your face very quickly. We have 3 minutes before this candle closes. All right. So that's the 30-minute to the 5-minute evaluation. That's the day trade perspective. Now, from this point, I'm not reacting to prices here. I'm waiting for a setup. There's nothing there right now, nothing. So I wait. All right. So now while we wait, we're going to keep this chart here on the side. Oops, I pressed the wrong button. Okay. We're going to keep this 5-minute chart open here on the side. Okay. And we're going to watch that for a setup. And then we're going to evaluate the major markets here on the larger time frame while we wait. All right, so you guys like the split screen? The one thing that I have to add to this, which I haven't able, as you could see, I wasn't able to set up the trade account thing on here. I want to actually be able to take a trade, and we can see the P&L and all that kind of stuff, and see how I manage the orders. Okay, so let's now look at the larger time frame, and let's evaluate from the swing trade perspective while our day trade ideas, while the market works itself out there. Okay, makes sense so far? Okay, so I see a quick question. Do you think if a short signal develops in the area between 17.3 and 17.5 would be a good entry? All right, so since we're on that time frame now, let's take a look. 17.3 to 17.5, a short signal. I mean, look where you are. Okay, in fact, you have a potential double bottom. A short signal would be a more appropriate for a day trade, possibly, not a swing trade. This is a high risk area for shorts. Now, it may turn into a continuation pattern, but let's just consider a few things here. The better level would be the 18Ks, right? This would be the area to be looking for a higher probability outcome and better reward risk. That's the area. Right, and that's basically like the 18s, 18.1, 18.3, that area. Until then, I mean, this is iffy, this whole area here. Now, again, we're trying to look at this from an objective point of view, and we're trying to look at this from both sides. No opinions, right? So it's a possible double bottom, and that can lead to a temporary squeeze, all right? And that squeeze can take you into those low 18s. Don't get overly optimistic. Don't get excited. There's no reason to. It's not a bull market. Now, let's go quickly to the weekly chart on this time frame, because this really gives you a lot of perspective. Look where it's sitting. All right, it basically made the lower low, and now it's just kind of sitting there. Okay, well, we still have the whole week before this thing closes. We have to see how it closes. But if this produces an inside bar, and in the following week that inside bar is compromised, the low is compromised, you're looking at a lower low. And the structure favors that. Okay, so the general trend is still bearish. That hasn't changed in a very long time. Okay, as much as people like to convince you that it has, there's no bull market here, and there's no evidence of one beginning. So the point is this: if you're looking for the long, it's aggressive, but that long can take you into the 18s, possibly up into this area. Okay. Usually with these, when you get consolidations like this, that whole area can act as a resistance. So, I mean, you're looking at a whole range between 18 and 20K, basically, all right? So that could be an aggressive swing trade long, possibly, and that can begin if this high is taken out, 17,130. I don't know if I'm going to call that because, again, it's a lower probability idea. There's no way to know if it'll get up into that area. It'll be highly aggressive. So we'll see. Otherwise, again, as far as the shorts go, you really should either wait for like those low 18Ks, or if it can get through that, then you're looking for this somewhere inside this entire zone. Okay, somewhere inside there would be the more ideal swing trade short. Does that make sense? That can take a couple of days to play out. Okay. Other than that, if we take out this low over here, we take that low out, then you're looking at 14K possibly. All right, maybe 12K. That's possible. Now, I'm not saying it will do that. It's going to, it's going to need a catalyst to get something like that going. So maybe there's some more FTX-like drama that comes out that pushes this market. I mean, on the economic front, we only have retail sales this week, which, it's usually not a major deal. And I don't really anticipate a big market move from something like that, although I could be wrong. Perhaps the S&P will play a role. If the S&P gets hammered, this thing will get hammered too. Okay, that's typically how it goes. All right, so anyway, keeping an eye on this, how much time we have? All right, we have 3 minutes for this candle to close. I'm back on the 5 minute. You notice, you see what I mean about overreacting to shorts? You see what I mean? Oh, it's a short. Captain Obvious says it was a short. I'm going to short it. Oh, it's green. Oh, I don't know. What's that all about? I'll hold it. It's a short. I think it's a short. Yeah, I'm just going to hold on to it. Yeah, whatever. Okay, you see what I mean? Don't buy into that nonsense. Don't be Captain Obvious, right? You'd be getting that's kind of painful right now. And if that thing turns into a short squeeze, then you're stuck in it, especially if you don't get out quickly. All right. So let's now take a look at the bond market. All right. Bond market. Now, the bond market is not really anything special here. All right. The bond market is very slow to really prove anything. And so we're going to be talking about the same thing every day for weeks, right? It's like watching paint dry. So you have this resistance here. It's still there because, oh, but there's a higher low. Yeah, but it hasn't taken out any resistances. That's like a bigger one right there. I want to see that one cleared. And not only that, I don't like these little tight little nothing higher lows. There's barely any time. There's barely any volume involved in that. I want to see I want to see like a more pronounced pullback, something like this. Okay. And I want to see that find itself a nice support somewhere in here. I would like to see that. If I see that, then I'll start to maybe make some adjustments. We'll see. But again, if I don't care what it does inside the range a lot of times, if it respects resistance levels, that's a telling sign for me. Okay. And so far it's been doing that. So I suspect rates are going to continue on that rising thing. We'll see. And this is where we're going to get that proof or not. Okay. If this thing breaks out significantly and we start seeing higher lows and old resistance levels become supports, that's going to be much more convincing. Now, in that scenario, I would not be surprised if the stock market was getting hammered. Okay. That would be very interesting. And that's something I would like to see, because that would be like the risk coming off. Okay. Here we go with the inside bar on. Being interrupted here by the 5 minute chart. So here comes the trade out. Here's the setup. We have the inside bar. The high here is 879. So we'll go with 9 even. Okay, 9 even, 16.9 even. It's a little higher than that, but I like to let the market work. 16.9 even. It's getting there. And the low here is what? What is this low? 855. Okay, it's only a 50-point stop. That's not bad, okay, for a day trade. So 9 even is the entry. All right, so you know it in advance. Right now this thing is at 880. So you have 20 points before it even gets to 9 even, right? I gave it 20-point head start. All right, so let's put the line at 9 even. Let's see if I can put that there. Where's 9 even? All right, 9 even is all the way up there. Okay. All the way up there. That's a lot of room for this thing to with the rate this thing's moving, I mean, I could probably put that entry a little bit lower, but 9 even. There we go. The trade is now active. Okay, so the stop here again is this low is 837. Okay, so 840. So basically, you're looking at 60-point risk. Okay, and why not the stop here? Because I think this inside bar is adequate. Now, what are we targeting? We're risking 60 points. All right, on the day trade, I need to make at least 60 points at minimum. If I could make more than that, ideally 120 points, that's 2-to-1, that would be a great trade, okay? Because I'm only risking half and I'm looking to make double. That, if you can follow that type of plan or that type of whatever you want to call it, structure over time, you should come out ahead, okay? Now, but that has nothing to do with the probability and the setups and all that stuff. That's just arranging or organizing your profit loss structure, meaning you're looking to win more than you lose. Okay, so we'll see as far as targeting goes. So we're looking at that. Basically means we're targeting what 17,000, right? What's the high here? 935. Is that the high? I'm looking at the wrong numbers here. That's 998. Okay, so we're targeting this area up here. All right, now we have to see how this goes. One question that I get a lot is, how do you maximize a winner? All right, well, here's the thing. You're looking for conflicting signals. If this thing gives us a straight line, if this thing just goes in a straight line and it closes strong up in this area, and I don't see anything conflicting, my first choice would be, well, let it run. Okay, if it wants to be strong, let it pay you. If it gives us a pin bar, it gives us a hard time, that's when we can start making adjustments. But if we're at 2-to-1, if we are at 2-to-1, the wise thing to do is to take something off the table, especially if you have 2 contracts, right? You take one off. You don't wait for a conflicting signal. You say, okay, I've got 1.5 or 2-to-1 reward risk. Wow, this candle looks amazing. Take one off. Don't let greed get in the way. Oh, this thing's going to go to, I have a feeling it's going to go to 18K. I'm just going to hold on to it because I'm going to maximize. No, take something off the table. Okay, especially if you are beating your risk, take something off the table. Don't ask why. Don't question it. Just take the money. Okay, the market is giving you a gift. Don't let greed get in the way. If you get excited by a vertical candle, you have a greed problem. Okay, so that's the first idea. Now, in this scenario here, I mean, I never mentioned that I was in 2 contracts, so we'll assume I'm in 1 contract. Okay, and when I'm able to do this with the orders and stuff like that, I'll take 2 contracts, and you can see exactly what I'm talking about. But right now, the plan is to look into this area for a possible exit. But since I only have 1 contract, okay, if it can get there, we'll have to see how it behaves. I may get a conflicting signal before then, and this thing may still lose. Okay, so keep that in mind. All right, so back to the bigger picture here while we're monitoring our Bitcoin situation. So see, it's nice when I do the split screen because otherwise I'd be talking and we miss the move. All right, so anyway, so you guys got the bond market. So let's now switch gears, go back to the bond market here. All right, so we got that. All right, let's move along, and let's now talk about the Nasdaq NSX USD. All right, now look at this. That's interesting. Now keep something in mind where we are seasonally, and that is, this is typically Santa rally time. Okay, nice 5-minute close, by the way. This is typically Santa rally time. There's a general feeling of optimism. All right, so you see that across the board, and that's where you have to be careful because you can say, well, that's just nonsense. Well, but markets are irrational. So here's the thing, even though the economic situation may not be improving specifically, or at least convincing me, it doesn't mean that the market won't do something stupid. Okay, I call it just stupid because it's not really in line with a lot of things, but that's the market. I don't question it. Okay, I just don't get in its way. So look, this is a significant resistance break. Okay, and it's following through. We never got the fake out, right? We had the fake out attempt yesterday, but it never gave us a sell signal, and instead it generated a new buy signal. That's interesting. The NASDAQ right now is up 273 points. Now, again, I don't care why people, oh, this news came. I don't care. Okay, it doesn't mean anything to me. Intraday that may be more meaningful, but on this chart, I mean, look, here's what I look at. Well, we got another resistance area right there. So how do we contend with that? Is this thing going to fake out again? I certainly, so the mistakes to avoid here, don't get sucked into this, number one. All right, this is a highly vulnerable area in a market that's not exactly bullish, right? And the bond market keeps pointing that out to us. So this can easily fake out and get everyone all long again. And next thing you know, it's testing this level next week, possibly. All right, so just keep that in mind. This is a higher risk area. How can you play something like this? Well, day trade stocks, right? Because day trades, this is great opportunities for day trades when you get a nice strong day like that, because you're in, you're out, and you're not exposed to what can happen if this thing fakes out, all right, as a day trader. That's one of the great things about that and why everyone thinks it's so whatever, but it's also the hardest way to participate in this game. So that's one thing. As far as swing trades go, this is going to be tough. All right. A good way to play on the swing trade time frame, in my opinion, is with options in this situation, because with options, you can control your risk in numerous ways, and you can actually tighten it to a point where if this thing fakes out, your loss is minimal. Right. I'm not going to get into all option strategies right now, but that's what I would use to participate in something like that, because options allow you to be aggressive without having to lose a lot of money. Okay, if you understand them really well. Anyway, so I should probably talk more about that kind of stuff, but not in this stream. So here's the thing. Yeah, so be careful with that. My point is this is not a place to go all in long. Be careful. If you're taking swing trade longs or whatever, you're exposing yourself to the long side, be prepared for the fake out. That's all I can tell you. And this is going to affect a lot of stocks. All right. So now that's the NASDAQ. Let's take a look at the dollar index. Okay. This is also going to be very telling. A lot of this stuff is reacting to the dollar. Now, interestingly enough, now we have retail sales this week. What was it on tomorrow, Wednesday, I think? And that can be a dollar sensitive report. So the dollar is pushing lower here. Kind of looks like the inverse of the bonds, which that makes sense. Pushing lower there, right? But as you can see, it's trying to find support at this area here. That's an ugly candle, yes, but it's a tail developing, right? So there's some buying stepping in. This candle action back here, this price action back here, that was a signal actually to go short. That's an inside bar to go short. But as you can see, it's right into a support level. This is a very significant support level. All right, notice I'm not using, if you notice, you don't see anything. This is just a clean chart. I'm just drawing levels. I'm looking at structure, and I'm looking at price action. This is all the stuff that I go through in my training program, okay? And my students that have taken my training program are able to follow this very carefully and understand how I come up with this stuff, because this is all based on price action, price geometry, price structure, and confirmations based on the patterns of the candles. That's basically it. I'm using the least amount of information possible, and I'm able to gain a lot of perspective that way. I mean, using these techniques helped me recognize the general market top. It helped me stay out of longs. It helped me avoid that huge Bitcoin pullback, because I saw what the structure was saying. I saw what the context was saying, and I was able to gauge the risk, and I gauged it correctly. And I told everyone, okay, no one wanted to hear it. But anyway, so here's the thing. This dollar situation, I'm not convinced that this is a short, okay? We're sitting at a major support. If a reversal develops in this area right here, if we get a double bottom or something like that over the next few days, first place I'm going is euro, and I'm shorting it, okay? That's what I'm looking for. So, the dollar and the euro are basically inverse to each other. Don't be confused by this, but that's bearish. Yes, the momentum is bearish. Okay, but the general structure, as we know with the dollar, is not bearish, right? This is the weekly dollar. Look at that. That's just a pullback. Look at that. It's a significant pullback, but it's a pullback. So, if the dollar continues to break and pushes lower, I'll be much more convinced, especially if we take out that support. Does that make sense to you guys? But look at that dollar move. That's pretty spectacular. It looks like an altcoin. All right, so we'll see how that goes. If anything, the dollar may at least have one more attempt at the high. Perhaps the dollar fails and does not make a new high, but there's plenty of opportunity. I mean, that could be a 200 pip move on the euro, right? So that's what I'm looking for on that. Anyway, so we have to keep an eye on that dollar. If that dollar rallies, you're going to see the pullback everywhere else. That's why I'm saying NASDAQ is vulnerable. All these markets are connected. They don't trade in isolation. Okay, it's called correlation. All right, let's move along here and let's take a look at the euro. All right, how's our trade doing so far? It was okay, but now what's going on over here? This candle just, all right, this candle's still new. We have to see how that candle goes. Hopefully it doesn't give it all back. Well, look, it's going right back to break even. Look at that. All right, I mean, one interesting question about this is, do you move the stop? When it comes to day trades, you can't be too jumpy on moving the stop. You really can't, because you're going to get stopped out a lot for break even. Things are very noisy. It may just tap you out, break even, reverse, and go right back up. And they got me out. And then you think it's a conspiracy theory and all that other stuff. Most of the time, you're better off just leaving it alone, most of the time. So in this situation, that's what I'm going to do. I'm going to leave it alone. We're going to see how that candle closes. It may look ugly, but that may turn into a pin bar. Okay, you have to just give it a chance. On 5-minute time frames, it's hard to trade. You know, the hardest part of it is being patient and waiting for these candles to close. All right, so now look, that's going back below where we got in, but let's see what happens. Okay, keep in mind the stop is all the way over here, so we'll see. All right, now let's talk about the euro. So you see that euro situation looks just like the inversion of the dollar. See that? So again, this is a great area. Stian's been asking me, is this a good location for shorts on the euro? It sure is. I mean, look at all this resistance we have here. Okay, look at this. Look at all these touch points, right? We have this over here. We have these two over here. See that? So this is a great location for a short, but a location is not enough, right? We need a setup. We need confirmation. Markets are irrational. This candle may close strong, you know, as the over the next few days, may close strong today, and it may take out the highs. Okay, if the dollar wants to go lower. I don't get in this thing's way, and I don't try to figure things out. I let the market tell me. So if there's no setup, there's nothing to do. If it wants to continue higher, go ahead, continue higher without me. I don't care. If I see the short setup, I know we're in a good location for it, and I will be all about selling the euro again. All right, and that pullback, if we get that pullback in the euro again, you know, all we're targeting is something like this in this area here. That's an easy 150 to 200 pips. That's very reasonable. All right, the range is actually much bigger than that. But as you notice, I'm not trying to maximize. What I want is a high probability of getting out green. That's what I want. So I tell people, look to make the least amount of money for the least amount of risk possible. No one wants to hear that. The retail trader wants to hear, I'm going to show you how to maximize your profit with my special tool. Just pay me $9,000 and I'll show you how it works. Nonsense. Look to make the least amount of money. Why the least? I'm here to make money because it's a higher probability of getting out green. Probabilities are something we can't see. All right. So, all right. So that's that situation. Right. That's the euro. Now, let me see if we have. Those are pretty much the major markets. Is there anything else you guys want to see? Let me go and see what kind of questions I have here. I've been ignoring you guys in the chat. Okay. I can't. I'm not very good at multitasking. All right. Wedge says over here, 6 waiting and 5 likes. Thanks, Wedge. Bill's always looking out for me. I appreciate that. Hey, Alice. All right. Go and report him to everyone. Yeah. All right. I appreciate that. You know, I don't know if YouTube, actually, I don't think YouTube rewards me for the like button because this is a stream and things don't work the same on a stream as they do with regular videos. So, you know, but anyway, hey, anything is better than nothing. I'll take it. I appreciate that. Hey, Jeff, good to see you. All right, Armin, cool, good to see you. I know I sent you guys some messages. That was the real me. Hey, Guy, how are you? All right. Alex, I have texted you. Oh, okay, with his account. Oh, Alex sent me the interview that interview with Sam with FTX guy, his girlfriend. Man, I don't know what to say. You know, all I could say was, man, with the kind of money that he was worth, you would think he could do a little better. All right, anyway, we're not talking dating strategy here. All right, that Netflix song I asked you a week ago, okay. I take it because I didn't have time. Okay. Okay, cool, cool. All right, well, I mean, again, Netflix, that was a reaction. We saw the whole market rally, and Netflix is basically a market stock, sort of, most of the time, right? Sometimes Netflix does its own thing, especially when it has bad reports. But a lot of times you can bet whatever the NASDAQ is doing, Netflix is going to be doing something similar, right? It's a market stock. The stocks that are not highly correlated tend to be pharmaceutical stocks or biotech stocks. Often they depend on like FDA approvals and stuff like that. And that's why day traders are all over those stocks, because they, you're just basically you're looking for a pattern, you're looking for a trend, and usually that trend is driven by a specific piece of news. Those often, like, the S&P may be minus 50 points and this stupid stock is up $3. Like, well, I don't understand, because those are not correlated stocks. Okay, but Netflix is. Anyway, just wanted to throw that in there. Hey, Shell, good to see you. All right, can you look at oil? Yeah, I was looking at oil actually yesterday, because I'm like, what's been going on with oil? Oil actually gave a short signal. Okay, WTI USD. Check this out. Now, oil is wild. Actually, it's USD WTI, right? That's the better one. Okay, oil is wild, and oil is very sensitive geopolitically. You have to be careful with this thing, because it gives signals all over the place, and that they can turn in your face and it can turn hard. But I think I like oil as a short, and I'll explain why here. First of all, the general structure recently in oil has been bearish. Okay, you see the lower highs and lower lows, but I mean, you have to kind of go back to get a little more perspective on that. Just going back further here, because oil, as we know, and it had a pretty significant rally. Let's just take a look at the weekly chart on oil. I mean, look at that. Look where we are, right, on the bigger picture. That's weekly oil. So that's not exactly that's a support on the bigger picture. So you have to be careful with the shorts. Okay. Now, obviously, when you're working with a swing trade, you're not working with the weekly chart, but understand the location where you are. That swing trade, if you short this, while it may be worth something, right? Perhaps oil tests this low over here over the next week or so. That can be worth something as a swing trade, but keep in mind, if that double bottoms, this thing can rally. I mean, that's a higher low. All right, it's a broader higher low, but over, relative to this structure over here, relative to this, you have a mini lower high. Okay, so which one is the market going to choose? Usually, the broader trend carries more weight. We have to see. I'm eyeing that Bitcoin situation. I'm not liking that. Okay, how much time do we have? We have 2 minutes. Okay, we're going to see how this candle closes. It may go straight to the stop. It may not. We'll see how that goes. All right, anyway, so back to oil here. Don't know which way the market's going to choose. So a way to play this, right, is if oil tests an extreme area relative to this structure right here, meaning the low, right, this low, this may be a nice long, a nice swing trade long in that area right there. Otherwise, if it keeps fooling around this upper area, that's going to be a good place for possible swing trade shorts. So now let's go to the smaller time frame. Right? See, so those are those two levels that I drew from the weekly chart, and now look where we are relative to those. This point right here is a tough spot because you're right in the middle. Okay, so that's a tough spot, even though we had this. See this reversal, right? You had this green candle, and then it just went right to red. You see that? And it took out the low of the green candle, and that's where the sell signal is, but the location is less than ideal, right? And this can easily turn into a long in this area. So what to do? I mean, it's going to depend on how aggressive or conservative you are. Like I said, the more ideal long would be this area. Okay, you can even give it a zone. You can say it's a zone there. But that's how I would trade oil. I was thinking about putting out a trade idea, but then I looked at the location. I don't know. I don't want to put trade ideas out just because there's a setup. Okay. I do want to see something a little more compelling, especially when we're in the middle of nowhere like this. Okay. It's the middle of nowhere with this thing. So either we test the resistance for a possible short, or we test that support, or maybe break that minor support a little bit, get into that lower range area for a possible long. That's what I'm thinking with oil. Again, I don't know how many of my customers or clients or followers trade oil, but if I see it, hey, it's a trade idea. Okay, so it's certainly on my radar. Thank you for asking about oil. All right, how we doing here? All right, so we're monitoring this Bitcoin trade, see how that goes. Any other questions on the larger time frame? How would the market read the ICP results? ICP, I know we let the market show, which, okay, but to get a feeling of what to expect once numbers are out. Okay, so don't use the word feeling. I don't mean to pick on you, but context. ICP, what is that? Can you explain that? Because I know where we have the retail sales tomorrow. Can you explain ICP a little further? I like thinking behind the idea and the tight stop loss. Okay, you're long this thing. Okay, I told you, Konstantinos, I told you. Hopefully, this thing doesn't turn into a loss, but it can. It can be a loss. All right, just so you know, I'm not one of these people that's going to pump you full of hope. Saw your message. Okay, no problem. Do the fibs mean anything? Okay, so Steen, that's a good question. Yes, they can, because again, what are they? Fibs are just a measure of proportions. That's all they are. So, you can use them. I like to use them typically when there is like a move like this. When something goes vertical, okay, something goes vertical, and you're looking for, and there's nothing to work with. Okay, when you're looking at this, man, that thing is vertical. That's not a great example because it's on a 5-minute chart. In fact, let me show you an example. Well, you asked as far as day trades go. So, okay, when you get a large move, okay, and you have nothing in front of you and you're looking for points of reference, you can do that. You can say, okay, well, these are going to give me some points of reference. You measure the move, okay, and then as the market pulls back and starts testing those proportions, it can give you some insight. But like as you can see, I don't draw fibs on these. Normally, I don't, because I don't need them. Okay, I can pretty much say, oh, we're halfway through, or we're 3/4 through, the entire structure. If I draw the thing from this low to this high, right, you're going to see some interesting things. Look where it bounced. I could have known that in advance. Well, it's just a proportion. All right, so you understand? In my opinion, you're better off not using them. Okay, especially on the smaller time frames. Less is more. All right, so like I said, I'll use them on occasion if I'm looking for some extra insight, or if I have no point of reference, then I'll look to that. But normally I could find points of reference. All right, so good question. I understand the risks. Okay. Oh, you're on paper. Okay, if it's on paper, okay, cool, no problem. Again, I don't want people coming to my stream and taking a trade and then coming out of the stream losing money. I just really don't want that. But if you take a real trade, hey, it can happen. I just want you to be aware of it. That's all. At some point I'd like to put on real trades. Why don't I put on real trades now? Because right now it's just not practical for me. I don't have the platform up, and it's just like it's a pain. Okay, and I'm trying to conduct the stream here and answer questions. And so that's why I'd rather just do it on paper and show you for educational purposes, and we can watch the outcome together. And you guys can ask me questions, okay? And like I said, maybe I don't know if Bill put that in the server, but I'm looking to call day trades in the server in the chat room as well, or have day trade ideas go through there, at least 3 of them per week, okay? Not every day, because there'll be some days where there's just nothing worth trading, right? You can't force trades. You can't force the market. Sometimes the market's just not cooperating, or it's just not worth it. It's not worth taking the risk. That's why, sometimes I see something setting up and then I look at the risk and I don't like it. And I won't share it, because you're better off, like Steen put, I always have to quote Steen, you're better off missing a move than losing money, okay? Because you can afford to miss all the moves in the world. You still have your money. All right, that 5-minute candle closed. That's a nice close. Okay, so far they haven't shaken us out of this thing yet, but I would like to see the next candle. The next candle is really going to have to show us something here. All right, what time is it? All right, so we have another. You can give this thing maybe another 10 minutes. That's what you want to see in the next 10 minutes. You want to see a nice strong candle start probing this area. Now, what are the chances of that? Well, look, with this low that's in place right here, that's theoretically a higher low. So a higher high is probable. All right, that's really the more likely outcome, and the higher high meaning, we test that. That would be ideal, but don't know if we're going to get up there, right? So notice my target is not up there. My target is in here, where it's much more likely to be reached. Higher probability of exiting, right, with green. That's all I'm interested in. Okay. Retail sales, I mean, positive number. Okay. Oh, so retail sales. I don't see, David, I'm not going to read into that. First of all, retail sales is usually not a big deal usually. So I don't know, I really don't know how the market's going to react to it. So that's why I look to the market and let the market figure it out. I would imagine if a low retail sales number comes out, I'm just gonna guess here because my opinion means nothing. If low retail sales comes out, that means maybe they will interpret that as inflation. That if that inflation number that we got from CPI is true, meaning, if we had inflation, retail sales should be higher, right? Because everyone has all this money and they're buying stuff that they don't need, right? But if it comes out low, no one has any money, no one's buying anything. Oh, so maybe we don't really have inflation, right? Maybe all this inflationary stuff was over. The Fed overreacted, right? Maybe that's how the market's going to interpret it. I don't know. So that's how it's been in this environment where something that comes out normally good, like a good jobs report, is bad. Why? Because it's inflationary. So good retail sales, possibly inflationary. Bad retail sales, good. It's good. Why? Because that means the Fed is overreacted, and the Fed will be expected to be like, okay, you know what? We were wrong about all this inflation. We're gonna lay off the interest rates now, and we're gonna start printing cheap money again, so we can have more inflation. So that's maybe how the market will interpret it. I don't know. That's my guess, and I definitely don't trade on those ideas. I let the price action tell me what to think. Okay, because I could be completely wrong. The market may interpret it some other way, and then there's some kind of irrational reaction, and I have to adjust anyway. So I'm always asking. I don't ask why. I ask, where are we, and what is the risk? That's all I ask, and that's the information I'm basically looking to extract from the market. Okay. I know you hate these, okay, but someone wrote this interesting script. If you want to have a look at it, was looking at it yesterday. Here's the thing. Here's why I say that. No, okay, no, I understand. If it had any true value, they wouldn't share it. That's the first thing. If it had true value, or if there was any type of true advantage, they wouldn't share it. They would keep it for themselves, or they would sell it to someone that can pay a lot of money for it, like a couple of $1 million. They'll sell it to that guy, but they're not going to put it out for free. Usually when they write those type of things, usually it leads to some kind of website, and then you can buy some other stuff that they sell. Usually, that's why I don't go for that stuff. I've experimented. Look, believe me, I've experimented with all kinds of things. Okay, scripts, other unique things, blah 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 blah. I've experimented with it all, and some things can give you maybe some perspective here and there, possibly, but most of it is based on the same stuff. Okay, unless it's like based on very unique order flow situations that you're looking at stuff that you normally can't see. Otherwise, it's most likely just useless, redundant information, as if same as putting on an oscillator on your chart. Okay, that's why I'm very skeptical, extremely skeptical. I've seen all that garbage. Most of it's nonsense. So it looks interesting. It may have some complexity to it, but please don't be fooled. If you want to send it to me, see, look, the Trendoscope or whatever, right? I'm sure there's some sales behind that. Not you selling, but I'm just saying. I'm always open to taking a look, but I'll pick out the holes right away. Okay. So I'll look it up. Okay. Okay. So yeah, look, I've seen, there was one, I'm going to wrap this up here in a minute, but I saw this commercial on YouTube. Some of these commercials, I can't believe people fall for this stuff. I really can't. A true opportunity is not going to be advertised to you on a commercial. Anyway, I saw this commercial of this software that they were selling for $150, and this thing generated buy and sell signals. And of course, they go back. Let me show you this random day. I'm going to select over here. Look, and I open up, oh, look, I made 40 pips over here. Oh, look over here. I made another 30 pips over here. Oh, look at this one. Oh, I made another 20 pips. Oh, this one I only made 5 pips. I mean, come on, this thing is not perfect, but it's not too bad, right? I mean, it's only $150. And I'm looking at that, and it's based on 13 criteria that blah, 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 blah. It's probably a moving average crossover, most likely, that you can't see, and it generates like the buy and sell. And I'm looking at these movements, and of course, they don't show when the market consolidates. They don't show that. They only show nice pronounced movements, okay? They only show, stuff that, like movements that look like this. Oh, look, I generated a sell signal over here. Oh, how nice. Okay? When the market gets into a consolidation, that thing is going to generate one false signal after another. It's always the same story. So any money that you make, oh, I made 40 pips here, you're just going to give it all back anyway. Okay? And they're selling that thing for $150. If you're new and you are naive, you will buy it. Okay? And they're going to get rich, not you. If that thing had that true value where it was just pulling pips out here and there like that, they wouldn't sell it. They would just put it to more. Look, the guy from FTX, do you know how he originally made his money? Before he put up FTX, I talked about this before. He was arbing Bitcoin, okay, across exchanges and basically making free money. Why wasn't he on YouTube sharing that strategy, teaching us how to write a program to arbitrage, Bitcoin arbitrage, and buy it at this exchange and then use an algo to move all that money across exchanges and bank accounts and blah, 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 and sell it at this other exchange 10% higher, each day after day, and basically pulling money out like it's an ATM. How come he wasn't on YouTube sharing that information with us? Because he's such a generous guy. How come? Instead, he starts FTX. Okay, that is when someone has an advantage like that, they don't share it. Okay, and he's a perfect example. So please don't be naive. I'm not picking on you. I'm just saying. All right, I've been in this game 23 years. I've seen so much nonsense and so many gimmicks that it's mind-boggling that people still believe it. But it's not that people are unintelligent. It's that people are emotional and they want to be lied to. They want to believe the lie, and there are lots of lies for sale. Okay, that's why no one really appreciates me. You guys do, but a lot of people don't, because I take all that hopium and all that false confidence and all that false hope and all those dreams. I take it away and I pull the wool away from your eyes. Oh, this game sucks. Yes, it does. It's hard. Okay, but people don't like to think that. They're like, oh, I'm just going to trade and I'm going to make money in 3 months. No, you're not. You're competing against the best and the brightest minds in the world, and they're fleecing you and you don't even know it most of the time. Okay, so you have to understand. That's why it's wise to understand the game from the industrial view first, not the egocentric view. Right? Everyone thinks, oh, I'm going to think of it from my point of view, me, because I'm important. I am important, but you have to think of it from the industry perspective. How do these guys make money? That's the first thing you have to look at, and how you fit into that process. Okay, that's really the best advice I can give to a beginner. And none of us start out that way. Okay. All right. What do you think of asymmetric compounding on small portion of available capital? Asymmetric compounding? What do you mean by asymmetric compounding? I mean, maybe you could be more specific about that. I mean, that sounds like, a bank account on steroids. He goes shopping with his card, and every time he enters a shop, he had a stock trick to get money in his account. Oh, I saw that one. I saw that one, Helen. I remember. They always say, oh, I had this weird little trick. They always say it's a weird little trick. Oh, I just made $1,000. Oh, let me go. I saw that one. And then he goes, I just came out from the mall over here, and hold on, another weird little. I just made another $5,000. Oh, that was easy. Oh, yeah. I'm going to go buy a Lamborghini. Hold on a sec. I just came out of the Lamborghini dealership, and I just made another $10,000. Wow, that was so easy. Hey, I can show you how I do this. It's a secret, but I'm going to show you. Here, just click on this link below. I know exactly that stupid commercial. I can't believe people buy that. I can't believe people believe that. All right. Anyway, I always appreciate and enjoy seeing you on these streams. Okay, cool. Cool. I appreciate that. That's my goal. I mean, I'm doing this because I want to help the retail trader. And people go, why? Why do you want to help people? Because I was in your shoes. I know exactly what you're going through. I spent years failing and losing money because no one told me. I believed in this dream, especially since I had made money when I first started, because the environment back then was not the same as it is now, nowhere near the same. And I thought that, hey, there's a way to make money at this, but I thought it was a lot easier than it actually is. Okay, because there were a few things that had not sunk in. And one of the biggest concepts that really helped me open my eyes, by the way, that thing is almost at its target, is that markets are random. That's like really like the number one thing, and no one wants to hear that either. If you want to lose it all, probably just try him out. Yeah. Okay. Okay, no problem. Yeah. Well, again, because you may say like, I don't even know who you are. I don't know any of you personally. I may know Bill. No, I'm joking. But I don't know any of you personally. But again, I do this because I know what it's like and it sucks. Okay. I know the path. I know where it leads. I know where it goes to. And it sucks. And, it would have been nice if someone told me these things 15 years ago when I was struggling, right? Not making any money. I knew I had a lot of knowledge, but not making any money. And I thought this was a game of skill. It's not. Okay, those were like the big things that really started to change. Of course, someone opened my eyes to some things which I talk about, and that's really what was the starting point. But people always think, when you get it, that a light bulb goes off, and now you're just going to go from making nothing to millions of dollars. No, not even close. Okay, when the light bulb goes off, you realize, man, I got to protect my capital, and you start making very small amounts of money. Okay, but the thing is, your losses are now controlled, and you become very good at controlling them. That's really it. Okay, I got to wrap this thing up. Yeah, I from Monday to 14th as a cup. Okay, I don't know what you're talking about there. But anyway, all right, here we are. So one thing that's been keeping me cup and handle. I don't know what you're talking about. Where? In what? In Bitcoin? Yeah, so Alex, yes, that's what's been keeping me on the stream. Normally I wrap this thing up, but we've had this trade running and I want to see the outcome. Usually I sign off and then like there's a good outcome and I'm never here to say, hey everyone look. So look, hey everyone look. We're at the price target. All right, so I just want to mention this because let's see, what's the high here? 994 is the high. So we're flirting with 17,000. 998. Yeah. So here's the thing. One contract, any hesitation? Look, we're getting some hesitation. What are we at right now? 73, 60. I'm just watching these prices. I'm gonna have to probably bang this thing out. Let's see. How much time do we have? We have 1 minute. Okay. I want to see how this thing closes, and then I'll make my judgment. All right. We have about 30 seconds, right? A little more than 30 seconds. So we were in the target area, as you saw, right? It was in the blue rectangle. I want to see, does this candle close strong? Okay. Let this thing go. Now, because, I'm not going to sit here and talk for another hour, I'm going to just take the profit. I just want to see how it closes. But I want to leave you with the thought process of, what to do if it closes strong and how to let the winner run, because people don't understand how to do that. They want some kind of exact price. There's no exact price. The market may turn anywhere from where it is now to here. It may turn, okay, the wrong way. So it's about really how much risk do you want to take? There's the close, okay? Nice strong close on that candle. I'm taking the money. So what's the price here? 990, 990 out, okay? So exited 990. But in theory, there's no reason to exit here yet. But by not exiting, all right, so I'm officially out 990. So what? The entry was, what was the entry? 9 even. So 90 points. Okay, and I risked 60 points. That's good reward risk. All right, so got out for a nice reward risk. But in theory, I want you to think about this. So right now, even though this current candle is red, it's still just open, and this thing may close strong. If you stay in this, basically the profit that you have, you're putting it at risk. Do you want to risk it? Maybe at this point you want to put your stop at break even so it becomes a risk-free trade, but keep in mind this thing may turn and go right to your break even stop, okay? Or maybe it runs further, okay? And maybe you can pick up another 50 to 100 points possibly, but don't let greed get in the way, okay? So let's say you get out here like I just got out and this thing runs another 100 points. Don't feel bad. Why? You risked 60 points to make 90. There's nothing wrong with that, okay? Oh man, I left all this money on. You didn't leave anything on the table. It's not your money. So get that entitlement thing out of your mind, okay? Anyway, that's enough. I got to stop talking. These sessions are only supposed to be 30 minutes, and I just can't stop. But there was a trade example. That's why I kept talking, because I'm watching that trade. And anyway, so you have to decide. Do you want to take the risk and risk your profits, which is a more aggressive thing to do? And when they work out, they work great. That's where a big trade comes from. Or would you rather just take your money for a good reward risk? I tend to be more conservative. I'm happy taking the least amount for the least amount of risk possible. All right, you guys. So, all right, cool. So, guys, I hope you learned something from this example. And again, if you guys need to reach me for any reason, check out my Discord server. You can send me messages on there. There's a link in the description. If you're interested in how I analyze markets like this, look at that. Oh, I left all that money on the table. Oh man, it's going to go up 300 points now. But whatever, I don't care. I'm out. You know where to find me, all that other stuff, and check out my training program. Okay, at markpremarkets.com. If you're new to this whole thing and you want to start off on the right foot, it's not for the absolute beginner, but if you've been playing around with charts for a little while and you have some kind of basic idea, but you're still not sure like how to put these things together, that's really who my training is more appropriate for. Okay, cool. So everyone, enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thank you so much for watching.